Hey fellow investors, it's Wednesday, December 9th, 2020. I'm Hoda, co-founder and CEO of Stockhardt, and here is a recap of today's market's noteworthy movements. It wasn't a good day for the stock market indices. Retail investors' favorite companies mostly ended the day in the red, as evidenced by an almost 2% decline of the Nasdaq index. The S&P 500 index and the Dow also finished the day in the red. The heightened valuations and the growing number of COVID-19 cases could be the causes of the Wednesday's drop. IPOs are quite hot in 2020, and today's public debut by DoorDash was an excellent example of it. Shares of DoorDash were up by more than 85% on Wednesday. The company is valued at more than $60 billion. Let me remind you what the company does. It delivers food to your doors. Of course, it's an excellent service, and especially during the pandemic, food delivered to our doors has been the best thing since the sliced bread. But a $60 billion valuation is a bit of a stretch. According to DoorDash's S1 documentation, the company generated $1.9 billion in revenue in the first 9 months of 2020. The valuation of $60 billion gives DoorDash more than 30 times price to sales ratio. Can DoorDash be 30 times bigger than what it is today? That's a question for all of us to ponder. Looking at the top losers of the day, a few significant drops were GameStop, that went down by more than 19%, and Bloom Energy, that was down by more than 17%. As we said earlier, many retail investors' favored stocks were also down, including Tesla. Shares of Tesla were down more than 8%. The drop seems to be mostly due to the overall market's drop. But we can't forget that even after the 8% drop, the stock is still hovering above 600 per shares, and many financial analysts still believe the company is extremely overvalued, including JP Morgan analyst Ryan Brinkman, who believes the fair market value of Tesla is about $90 per share. Either Mr. Brinkman would lose his job for such valuations, or he would be crowned as the most courageous analyst in the world. Which one is it? We have to wait and see. The SEC is going to give us SIP. Yay! SIP, or Securities Information Processors, is the detailed data showing supply and demand for stocks traded on the stock exchanges. Such information is currently being sold at a premium to professional investors and traders only. The SEC is now ready to share that information with us retail investors. As part of a larger modernization of the stock exchanges infrastructures and to bring more transparency and fairness to the stock market, the SEC has made a few changes, including opening up the SIP access to everyone. While more data and information parity is a good thing, think of all the additional minute-by-minute coverage we all have to endure on social media and financial media. Speaking of all the noise and craziness that we all endure every day, we just released a new feature at Stockhardt, and our users got the first taste of it today. It's a dashboard to evaluate the health of your stock market research. It tells you how many companies you have researched and followed and whether you have done enough screening in the last 30 days. All successful investors have a consistent process every month to research and monitor their holdings and discover new companies. Do you? Head to your Stockhardt, log in, and go to the homepage to see how healthy and consistent your research has been in the last 30 days. That's it for today. If you like these quick market recap reports directly from my daily stock market research, please like and subscribe and share them with your fellow investors. I'll see you tomorrow.